Hello everybody, I'm your host, Eric Bird, here at StopStrugglingNow.com. And forgive me for the traffic, but today I was thinking I was going to make a video because I invested in a few shares of companies, in stocks. So I figured I might as well share it. It wouldn't be fair since we're always talking about Stop Struggling Now. So anyhow, you can see over my shoulder, here's an investment bank down here in Fort Myers. But that's not where we do our investing. We use Robinhood or Webull. So we're going to talk about it. Stay tuned. Please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right. Just had to share with you stocks, investments. You know how we do it here at Stop Struggling Now. Every now and then you have to put in a little money into invest in yourself, invest in the future. But the thing is, I'm no stock guru. This is just informational purposes only, but only recommendations. The companies that I recently started putting money into, as everyone, like I said before, you should have money in certain different aspects of creating your wealth. Stocks traditionally have went up. There's crashes that have happened, then they kind of rise again. Some companies don't come out of it, but you might want to stick with the big boys. Fortune 500s help, and there's always new startups that some of you might have been lucky enough to do NEO with the first 24 to 72 hours, where we all were able to double our money in that short span if you would have sold it at that point. And here we are again. I just wanted to update you on what I'm investing in right now and what you may consider yourself. As you can see, I'm here with the Ford Motor Company, and you can see their share is basically $10 a share. They still issue dividends, meaning every 3 months you'll receive 12 cents, 15 cents, whatever the case may be. And as you can see, if you start accumulating enough shares of stock that issue dividends, you could have thousands of shares and every 3 months receive a check. So this is how wealth is created, and it's over time. So if you start spending, even if it was one share, you can go to Robinhood, you can go to Webull, you'll see the links down below. We've mentioned this before, where you can trade for free. It doesn't cost you any money, whether you buy or sell on Robinhood. Webull is the same. So traditionally, you would always have to pay a commission to a broker or to a company. But with these new apps that have come out, you can just basically spend $10 and you have a share. You spend $10 a week, $20 a week, or $20 a month, or $20 every 6 months, or $10 every 6 months. It generally stays within this range, because as you can see here, just on this example with Ford, 52-week high is $10.56, 52-week low $7.41. So you can see it's over time. But imagine 10 years from now, if you had 1,000 shares, and they're saying, okay, we're going to pay you 15 cents, or they still issue dividends and they're paying 15 cents per share, and whatever that ends up being, that's what you would have every 3 months coming in. Or you can reinvest it. You could say, I don't want the dividends as cash, just reinvest it back into buying more shares. And this is actually ultimately how you create wealth over a 20-year period, over a 10-year period. You reinvest, meaning you're buying more shares with the money that they're giving you. Using their own money to buy more shares is how you create wealth. This is why the stock market is major, and unfortunately 80% of American citizens do not even invest in the stock market. You heard that correct. About 80% do not. So the top 1%, top 5% who have money to spend, or even if you work at a job and you put money in a 401k, things like that, you're way ahead of the curve. At least down the line, you'll have some money coming in, and you'll also possibly have money made, because sometimes in inflationary situations, 10 years or 20 years from now, the Ford Motor Company stock might be $20. And so you get your dividends, and you get the appreciation of price because the dollar is worth less, so therefore the stock costs more. But anyhow, I won't get into that right now, but I just wanted to let everybody know this is what I've bought in the last month. Ford Motor Company, and the reason being, one of the reasons is because of this autonomous. Ford expands autonomous vehicle testing with new self-driving prototype, and also it's not merely because of their autonomous vehicle. They actually have deals in the background or made partnerships where they're going to be on the forefront of, or trying to be, on autonomous vehicle driving. So that is a good thing for them. At least they're looking down the future, because ultimately we're all going to have cars that are going to be self-driving. So next up, the second one is AT&T. Everybody's heard of AT&T. AT&T issues dividends as well. And you can see it's 5.95%. Now this yield is all based on your stock price. So just because they give you $2 a year in dividends, 50 cents every 3 months, doesn't mean that it ends up being 5.95%. It all depends on what the stock price is that you purchase it at. But either way, here we have AT&T, who gives out 50 cents right now. They are anyhow 50 cents per quarter or thereabouts. And so you get $2 per year. So again, you can imagine if you had 1,000 shares, and you can do the math easily, and you get 50 cents every time, that ends up being money. Or you can make it reinvest where you buy more shares, which now means buying more shares means you receive more money from dividends. And ultimately, dividends, in case you don't know, has a lower tax rate, which also has to do with something I mentioned the other day with business credit, LLCs. You might want to put in there that you're issuing dividends. And that'll be another video on another day on the tax implications versus a salary, or versus commission, or versus anything else. So keep all that in mind. But here's another stock, and you can see historically what has happened. I'll show you with their dividends. Historically, it even went up now. In this month, it's going to be 51 cents instead of 50. See, last year it was 50. So historically, the strangest thing is, even if you go back, in the 80s, in the heyday, they were issuing $1.60, $1.74 per share, which is astronomical. But that's when cell phone was on the verge of, it already exploded. Verizon, AT&T, Sprint, and all these guys were multi-billion, trillion-dollar companies, probably billions at the time, because trillions just came out now because of inflation. But definitely billion-dollar companies on the rise, because nobody foresaw what was going to happen with the internet and other things. But then you can see they dropped it down over the course of time, and then 1990s down to 37 cents, and then since then it's been rising back up, then dropped back down. So it's kind of one of these things where, in their case, they issue dividends, but they kind of fluctuate a little bit, but they rise generally. So again, AT&T is a billion-dollar company. They're going to be around. They're not going anywhere. So this is a safe bet for you, your children, your family. People can throw money in a pot and say, okay, we're going to increase on, we'll get dividend money. And as you can see over time, if you're lucky enough to be creating an environment for trust funds and things like that, and now you have, instead of 1,000 shares, you have 10,000 shares. Now, as you can see, that creates wealth, and now you can pass it along, and now your family is holding money that generates money every 3 months. Then you can invest in everything, and this is not a lifetime. This doesn't take 50 years or 60 years to do. Just simply the money that you're wasting going to get a $10 cafe mocha latte at Starbucks, or eating at a fast food restaurant, family of 4, every weekend, going to the movies every 2 or 3 weeks, that money could have been put towards these type of stocks that have an upside and issue dividends, but nobody thinks of it that way. If you start thinking how much money do you spend on all this extracurricular activity that you're doing that doesn't generate anything, and you say, well, I spent $5,000 this year on this entertainment that I just blew money off, and instead invested into something, then you could have money coming in every 3 months, or money being reinvested every 3 months, and then 10 years from now, 5 years from now, 15 years from now, you're sitting there with a nice little nest egg. These are all things to think about. And I'll stop with the last thing. As you know, I've mentioned this before, this TIVX. It's a velocity thing. You have to stay on top of it. I'll repeat, this is not something that you can just simply buy and let sit. In this case, at one time, 6 months ago, TIVX was at $70 a share. Stock market was going down a little bit. This kind of goes against the stock market. So when the stock market goes up, TIVX goes down. When the stock market starts going down, TIVX goes up. They do not issue any dividends for TIVX. This is all straight stock only. So again, this is not a financial channel, so to speak, for investment purposes. But again, at $13, I had to go. Well, I bought mine actually at $14, but at $13.43 or $14, this right here seems to be a good play, because the stock market is all-time record highs. This is in light of, from 2009 to now, it's been rising. So a year over year, it's been rising pretty much. So sooner or later in the history of America, usually every 8 to 10 years, there's a recession, or a correction, as they like to say. So the fact that we've now hit 10 years generally means that something should have already happened. Well, as you know, if you've been watching the channel, we all know things are happening. I've put it out there before. You can go see some of the previous videos. You can go to the StopStrugglingNow.com website and look up financial information, and it'll have the stats and the statistics on what's been going on in America and what I talk about oftentimes. So when there's a recession coming, there's reasons. It's not just because it's in your head. It's because people are getting laid off, because there's record amount of stores closing. These kind of things all add up. The most amount of credit card debt being held by American citizens means people can't afford to pay things off of their paycheck, and therefore they're using their credit to buy items. So now the credit is boosted up for American citizens, and that's an all-time record. So you know what's coming when people don't pay their car notes, and that's a record. All that adds up. So if you're able to put money aside and invest it, and able to leave it there, and then even when the economy goes bad, or even when you lose your job, at least you say, hey, I have this little nest egg here. Yes, you don't really want to touch it, but at least you did something. The best thing to do is to save and be 6 months out all the time. So have 6 months worth of rent, 6 months worth of your liabilities, such as your taxes, your food, water, things like this in the cupboards, not just for the week or the 2 weeks, but you might want to put things away that might have a month or 2 month stay, because when things hit the fan, grocery stores are going to be empty. People are going to be rushing there to get just the basic necessities. So you want to be able to have this already in house, and even if you lose your job, you want to have it in your house. So then that way you're sitting there going, oh man, at least we have food here for a week, 2, 3, 5, 6, 7, 8, 10 weeks. And you can then therefore reset yourself and be able to create something new, which at the same time, even though I'm talking about when I'm investing in, this also goes with, if you're going to do anything, now is the time to start. There's this Instagram situation that came out where they canceled people who had hundreds of thousands of subscribers, and they just canceled them. Those people were making money on a daily, weekly basis from all kind of things, and then they wake up and find out they're canceled. This could happen to anybody. This could happen to me. This could happen to you. This could happen to any other YouTuber, anybody else that does anything with Facebook, Instagram, any social media. They can at any time say terms of service were violated, we're canceling you. But at the same time, you have to start somewhere. Get your online presence. Start a business legitimately. It's simple. Most states, it's easy. California costs a lot of money ultimately because you have the yearly cost. But other states, you can incorporate LLC, get things started. Urgency is now. You have about a year and a half maximum. But if you start right now, doing everything, just a little bit here, a little bit there, you'll end up all right. The Stop Struggling Now way. So anyhow, thank you for watching. Thank you for listening. Please like, subscribe, and click the bell below so you get the latest updates. And we all know how hard it is out here, but I'm going to start something for everybody on the Build Your Credit. I'm going to be going step by step, just like I did the flea market video. I'm going to be starting a company with a virtual office and build the credit, and I'll go probably once a month or every few weeks. I'll give an update on how it's done, so then everybody can see over the course of time what happened and how we were able to build up our business credit and the credit lines that we ultimately received. So I'm starting the new business credit builders program, and the cost is $1,599, and I'm going to get into it on another video. But for right now, these are the stocks that I've invested in this past month, and all I can say is you should do something as well, along with the gold and silver like we talked about before. Just get maybe 5% here. Silver's easy, only because it's only about $16, $17 per ounce. You can buy an ounce, you can buy 5 ounces, you can buy 10 ounces. It doesn't cost that much, but just a little bit of that, because you don't want to be carrying that around when shit hits the fan. Anyhow, keep your head up, keep moving, and I'm out.